tell you, there is so much going on, and Doc, you've got so much information in front of us, but you really have to look at what's happening in just over a week right now, and that's an election, and that has really caused some uncertainty. Mm-hmm. But the markets are trying to tell us what's going to happen. We look at some of the betting markets. All of that is suggesting one party over another, but the market's reacting to that, and most importantly, we see the Treasury market start to move.
Yeah, we've seen Treasury yields move up pretty dramatically over the course of the last couple of weeks, and they have gone up as the odds in the betting markets, and according to some of the polls that we follow, of perhaps a red wave happening. As that probability has gone up, yields have also moved up. And I think a lot of it is based upon really two factors. Number one, expectations that maybe growth could be a little bit faster, but then also some of the concerns about debt deficits, what's going to happen if we don't start talking about spending and we shift the focus away from tax policy.
Yeah, that's exactly right. And of course, Danny opened the show with talking about a beige flag, and we got what's called a beige book report. And a lot of that, on balance, is really talking about the economic activity that's going on.
It is, and that's where I had to look up what a beige flag was. I've been seeing it on social media, and it's oftentimes talking about like a spouse or something, some of these little oddities and quirks that they have. That it's not a red flag, it's not a green flag, it's just kind of this weird thing, maybe a little endearing, right? And I think that's what's been happening with the economic data. There's this beige flag where you have the Beige Book, which is a collection of anecdotes from around the country. The Federal Reserve does this before every policy meeting. They want to hear from Main Street and from banks what's going on with economic activity. And it's saying that it's not going anywhere fast. And it's been striking that tone for quite a while. But yet the quote-unquote hard data that we get, GDP numbers, durable goods orders, consumer spending, so these things that you can more quantify, those have been a lot stronger. So you have this disconnect between this hard data and the soft data, and that persists. Where is the truth? Is it with the hard data, which honestly sometimes is revised quite a bit, not just a month later, but even years later? And whereas the soft data, that doesn't get revised. And so maybe the truth is somewhere in between.
And just like everything else, the truth usually sees the light of day over time. So with we'll get the evidence as we start to go down the road, but we see some reports on consumer spending, and that's been mixed depending upon where you go.
So on Friday, we received the consumer sentiment numbers. It's just a preliminary reading, so it's subject to some revisions, but it's still showing that consumers aren't feeling the greatest. But what we're interested in is how are they spending their money? And so far, it is a little mixed. It seems like people are willing to still pay for life's little luxuries. Some of the companies that reported, as far as like Deckers and Skechers, and we're not recommending those necessarily, but just to highlight what they've been saying, their sales have been pretty good because of the price points and the quality. But then you look at some of those bigger ticket items like Whirlpool, they reported results. And buying a washer or dryer, that's a big expense.
It's going to go with really existing home sales, and we've seen that fall to a significant low, I think about a 14-year low. And because new homes aren't being sold, people aren't going and buying appliances as well.
That's right. Yeah, and as far as the renovations that are taking place, so it has all these knock-on effects. A lot of the slowdown that we've seen in the existing home market and even new home sales has really, I think, been, if you think back where we were with the 30-year fixed rate mortgage, it looked like we were heading down towards, maybe with a 5% headline number on there, something like 5.9, but instead it retreated. Ever since the Fed cut rates by 50 basis points, the 10-year Treasury and the 30-year fixed rate mortgage is up 60 basis points, so 0.6.
And let's try to explain that. Yep. And the reason why, in my opinion, the Fed follows the Treasury, not the other way around. And so the Treasury market is looking forward. The Fed is looking at evidence in the rearview mirror. And so as these rates start to go back up, that will slow home purchases as well.
It is. And so we're at a 14-year low in terms of the existing home sales. People who thought that they were going to get some reprieve with mortgages where it might make it a little bit easier to move, they have decided that, well, not yet. Why move when you have the national average mortgage rate is 3.25%. Mm-hmm. Right now, we're at close to above 7% on a 30-year fixed rate. That is a huge difference in terms of your monthly payments. And so a lot of people are still deciding, let's just stick it out where we are.
Yeah, and that's exactly right. So people stay with the mortgages they have. And just lastly, the one thing I want to cover, we talked about beige flags, but we should talk about green shoots as we get to the end of this segment. and that is there is a lot of clarity coming out. We're starting to see what the Fed is going to do. We're going to have an answer one way or another on an election. We're starting to see what's happening in Europe, and earnings reports are really looking up.
Absolutely. And when we look at earnings season, which we're in the midst of right now, it's coming in better than expected. The expectations coming in was for about a 4% increase year over year on earnings. And we're actually at a run rate closer to about 5 or 6%. Banks are saying that the quality of the loans that they have are pretty good. Defaults aren't rising. A lot of businesses are reporting that maybe September and October was about the bottom for their sales, and they're expecting a ramp up as we get past the election. So, yeah, you said it was green shoots, and I think that's a great way to put it. It's like you're getting green shoots in fall instead of having to wait until spring.